I'm Sean Aylmer, and this is a Fear and Greed extended interview. All the other good bits we couldn't fit into the daily podcast. If you're looking for the daily episode of Fear and Greed, check the podcast playlist. Otherwise, enjoy the interview. Barely a day goes by without another development in the world of cryptocurrency. The headlines are, of course, dominated by Bitcoin and the often volatile fluctuations in its price. It recently hit a new record of more than $61,000 before dropping back again. But it's not the only cryptocurrency out there. In fact, there are literally thousands of them, and more investors are starting to consider their options. Today, I wanted to look more closely at investing in cryptocurrency when there are so many alternatives and so much risk if you don't know what you're doing. Mena Theodorou is the co-founder of Coinstash, an Australian cryptocurrency platform. Mena, welcome to Fear and Greed.
Hi, Sean. Thank you very much for having me.
First off, tell me about Coinstash. How's it work? How long ago did you start it? And what's the take-up rate been like?
Well, Coinstash started out in 2017 with an idea, and then we actually started to execute that in 2019. The main focus of the platform is for it to be a broker platform rather than an exchange itself. So what we do is we have a set price where you can buy and sell, and there is no order book. And with that vision comes the simplicity of using the platform itself. We currently have around 22 coins that we support, but we are actively adding more. And at the moment, we're running a virtual crowd fund, which is basically to take everything to the next level. We're going to be offering more products for Australians with the security of an Australian entity. People will be able to earn interest, borrow, and also spend with a Coinstash credit card in the very near future.
Okay, so how will borrowing work through the platform?
So essentially, these products, they do exist globally for the cryptocurrency space. However, they're not supported, as I said, by an Australian company. So the borrowing works with collateralizing your cryptocurrency that you have purchased as an investment, and then allowing you to take out AUD or a different cryptocurrency with an interest rate attached to that.
I've been through it all before on Fear and Greed, but for the benefit of any beginners listening, can you give me a summary of cryptocurrency and how it works?
So that is quite a broad thing to ask, but I can tell you that cryptocurrency in its origins was designed, what Bitcoin's white paper was about was to be used as a currency, which everyone understands. But now the amount of coins that exist, the digital space for cryptocurrency, there is, as you mentioned, there's thousands of different coins with thousands of different purposes. So it's changed a lot, but how it works is most of the time there is a network that runs behind a particular coin. Those networks can be considered cryptocurrency miners, and it's decentralized, and it basically enables people to do something without having to have any restrictions whatsoever. And some of the coins, such as Ethereum, that helps with having transparency and a trustless environment, decentralized environment.
Looking at Bitcoin, why is that one so volatile? I mentioned that it set a new record, but it's also had some dramatic falls in the past, losing 80% of its value in late 2017, early 2018. Why is it so volatile?
Sure, that's a good question, Sean. It's hard to also answer that one, but I can tell you that we're looking at a totally different space from now compared to 2017, 2018. Back then, it looked like more so retail investors were involved and driving the price up. Now you're seeing institutional investors coming on board, and a lot of them writing papers about it, explaining why they see the benefits of Bitcoin for the future in any space. Generally speaking, Bitcoin and any other coin that has value is given value by whoever's participating in that particular coin. So Bitcoin, Ethereum, Ripple, Cardano, which is another one in the news at the moment. These are all coins that is getting attention, and there's big players getting investment behind them. It's a young market still, so there's so much more room for growth, which also means there's a lot of, right now with the volatile nature, it's a lot of manipulation in pricing back and forth. But overall, the consensus is that there is more attention from institutional investors. Just a couple of weeks ago, Citibank released their statement that Bitcoin is going to be seen as the international trade currency. So everyone's talking about it, and everyone's looking in that direction. It has scarcity attached to it. there's limited supply, which means that if you consider it a store of wealth, which is what it currently is, the price will go up because everyone purchases a little bit of it and believes that it will continue to be worth something. I just want to touch quickly on the total supply. So the total supply of Bitcoin is 21 million, but I believe last time I checked, there is around 9 million Bitcoins, which is considered ghost Bitcoins. These are inside wallets in the cryptocurrency space, which they've never been touched for, I think it's 5 or 6 years. They have to say that no one's touched those particular Bitcoins. So what that means is, even though the total supply is 21 million, you minus 9 from that, so the scarcity of Bitcoin is a major factor of why it keeps its value as well.
We'll be back with more in a moment. I'm talking to co-founder of Coinstash, Mena Theodorou. What do you make of Elon Musk's role in pushing the price higher? He tweeted a lot, very pro-Bitcoin. Then Tesla bought $1.5 billion of Bitcoin. And then Bill Gates warned that anyone with less money than Musk to watch out, that it could be a mania.
I think Elon understands what is the future. And I think we're moving into a digital revolution, if we're not already there already. So that is why everything is being digitalized now. So you'll see in the crypto space, there's a term called an NFT, non-fungible tokens. And basically what that is, you can create something unique and store it on the blockchain. And it's a way to say it's a one-of-a-kind type item. So as an example, imagine if you created a digital painting and you wanted it to be, this is the original version of this. You can basically put that on one of the blockchains. At the moment, the Ethereum chain is being used for that as well. And it's there forever. And if you own it inside your wallet, it's yours. And you can say, I have the first one of this. So if we're seeing everything become digitalized, I think that Elon is very smart in what he's pushing the masses in that direction as well, to bring them on board to something that a lot of us in the crypto space have already known for many years of where the movement is going. And just on that subject of art being digitalized, it doesn't necessarily need to originate as digital art. And what I mean by that is there was a Banksy painting. He's a very popular street artist. And one of his paintings was burnt live on YouTube. And then an NFT was created in its place. So it doesn't necessarily need to originate as digital. It takes physical assets and puts them on the blockchain too. So as I said, digital revolution is the future. Elon Musk recognizes this and he's already getting on board early with the corporate side of things.
Let's go through some of the other main cryptocurrencies. There are thousands, but let's focus on the main ones that people are trading. Ethereum is the second largest, am I right?
That's correct. Yes. So at the moment, Ethereum is number 2 on the leaderboard for cryptocurrencies. Its primary focus is to be a smart contract coin, meaning that you can build decentralized applications on piggyback off their chain. So it means that you don't have to reinvent the whole blockchain technology. You can basically start to develop things, applications that can be taken from current traditional spaces and plug them in with blockchain technology. So Ethereum's quite popular, and it is the number 1 smart contract coin that exists. However, there are many other ones that exist as well. An example would be EOS and Cardano as well. They're all doing the same thing. Essentially, they're trying to capture the market for the same reasons. I think Ethereum is the number 1 and the most known for that.
What about Ripple?
Ripple's kind of a touchy subject at the moment. I'm not sure if you're aware of the SEC's investigation on them. I mean, Ripple is designed to be actual currency. So let me just touch on to say that Bitcoin was originally meant to be a currency and used as a form of payment. However, it has become over time a store of wealth as its primary purpose. And then, of course, Ripple is a currency and it's meant to be used as a remittance and a money transfer coin. But there's a lot of shadiness around what they're doing and how they've achieved to where they are today. It's hard to say what's going to happen with Ripple because we're still waiting for the investigations and that could take years to finish up. But yeah, its purpose is a currency. So you've got totally different coins for different things.
Any others that you're seeing Australian investors getting involved in?
Well, there's a whole separated decentralized finance now as the go-to in the cryptocurrency space. And I won't get into that too much because it's quite a in-depth discussion to have. But the DeFi space is booming with different products, and one of those products is insurance, for example. So people are taking traditional. It's basically there's one called Cover, for example. They take traditional your way of buying insurance, but they do it through the Ethereum blockchain. So it basically enables people to have a trustless way to purchase insurance for whatever they would like to purchase. At the moment, Cover is focused on insurance for just things inside the cryptocurrency space. But in the future, that it can extend out much further than that. And really, it's quite in depth, but there are many different coins for many different purposes. I'm really a big fan of the DeFi space at the moment. And yeah, that's a lot to go into, but we can do it another time, I guess.
Mena, stay with me. We'll be right back. My guest today is Mena Theodorou, co-founder of Coinstash. So what are the main risks Australians should be aware of when investing in crypto?
Sure. So basically, what we've noticed with Coinstash is generally what a lot of people see is a spam email that comes in and says, you could be making this much money with investing in Bitcoin. Now, with the added attention to cryptocurrency right now, a lot of those spam emails are actually being opened and people are starting to fall for the quicker returns, so to say, which even when you consider how much of a return you could have in a year if you were to hold, even if you had bought at the highest point in 2017, which was, I think, around 27,000 or thereabouts Australian dollars, you wouldn't have lost money because over time, as more people get involved in this and the value of it is substantiated, you're sitting at, I think last week, the price went up to around 80,000 AUD. So basically, these kind of returns are not always what people want. They want more. So they'll end up falling for different types of scams that exist for even faster returns. That's one risk that people should be aware of. You don't want to trust any websites other than the major ones, and do your research on that. So with Coinstash, what we do is if anyone is sending funds out, we ask them to, obviously we have transaction monitoring in place to see where it's going. So we can be sure to check that address and see if it's the rating of that address they're sending to. But if they tell us they're sending it somewhere else and we have a known list, a blacklist, we tell them, this is not good for you to do. You should not be doing that. We highly advise against it. If they still refuse to, then we'll end up rejecting their account. That's how it is. So the risks, crypto is, because everything is decentralized and private, it also comes with that added risk of having no security to call the bank and to say, my money has been transferred out of my account, what do I do? So everything is putting the risk onto the user. However, if they can manage that risk appropriately by just following guidelines from what we list and the articles that we release, and not making rash decisions on returns, like trying to get as much money as they possibly can in such a short amount of time, everything should be fine.
Now, like any investments, people need to do their research before getting involved. And while Bitcoin and Ethereum have been around for a while and have established themselves, there are a lot of new cryptocurrencies coming through that are essentially an unknown risk.
Absolutely. And I guess one way to look at it is when your neighbor comes to you and says, like, hey, have you heard of this particular coin? Yeah, don't just go jumping on board, because it's likely they're looking to have something returned from that as well. I'll give you an example of what I mean by that. Is recently someone said to me, have you heard of Bitcoin Black? And instantly I looked at that person and I said, don't buy Bitcoin Black. And they're like, oh no, but this is going to be the next big thing. This is the next one. And how many times in the years that I've been in this space since 2013, how many times I've heard people say that, and they're looking for that, again, quick return on something. And if you stick with the major coins and don't start to speculate too much outside of that, unless you have enough time to do the proper, do your proper research into something, there's many places to find information about different things. And then just from a holistic approach, understand what the coin is doing and what they're planning to do, how it will change. A lot of coins that come out into the cryptocurrency space have no intrinsic value whatsoever. The value is just, again, it's nothing, so that they have no utility to them. It's just basically everyone else believing that it has value when it really has zero value. So Bitcoin Black is a zero value coin. It has nothing that it does which is spectacular to any other coin that exists. Got to be really careful with these ones and really look into it as much as you can.
Finally, there's something going around that looks like it should be a joke, but it's not. Can you explain Dogecoin? I hope I'm saying that right.
You are saying it right. So Dogecoin originated as a meme coin. If you want to get into the nitty gritty of it, it's based off the Litecoin algorithm. So each coin, as I said, exists and has different ways how it does different things. Dogecoin is supposed to be a fun way to pay for things. It's a fun form of payment. It was originally a joke, and just with added attention, I guess what we're seeing is a lot of people are starting to find enjoyment with the humorous sides of things. So if it is a joke, they're more likely to talk about it. It is another cryptocurrency. It's designed as a form of money transfer. So it's a currency, but it originally was just a joke. And there was billions of coins in its total supply. The price of a coin can be determined as well by the amount of coins. So as I mentioned, Bitcoin has scarcity. Dogecoin does not. There's a lot of them out there.
Mena, thanks for talking to Fear and Greed.
Thank you so much, Sean.
That was Mena Theodorou, co-founder of Coinstash.